All right, today we're going to dig into a really big challenge in the crypto world. How do you trade assets between blockchains that, well, just don't speak the same language? And we're going to see how one project, Maya Protocol, is trying to make that as easy as a single click.
So let's just paint a picture here. Imagine you're holding some Bitcoin, but you see this really exciting new token that only lives on the Arbitrum network. The question is, how do you make that trade? For a long time, the answer has been a complicated, risky, multi-step headache. And here's why it's such a pain. At their core, Bitcoin and Arbitrum are totally separate universes. They have their own rules, their own code. They were just never built to interact directly. This fundamental incompatibility is what creates all the friction and risk for users like you and me. But this is exactly the problem that Maya Protocol was created to fix. You can think of it as a kind of universal translator for crypto, a digital bridge that creates one smooth path between all these isolated blockchain worlds. So what is it really? Well, the official definition is a decentralized liquidity protocol. Let's break that down. Decentralized means no single company or person is in control. Liquidity is just the pools of crypto that make the trades possible, and the whole point is to enable non-custodial seamless asset swaps. In simple terms, it's a community-owned bridge for your crypto. Now, out of all those words, that term non-custodial is without a doubt the most important one. For anyone who really cares about the security and control of their own funds, this is an absolute game changer. Being a non-custodial means you never actually hand your crypto over to an exchange or some other third party. Your assets never sit in their wallet. Instead, the swap happens directly from your wallet through some really clever code. Your funds only leave at the exact microsecond that the other assets are coming in. It all happens at once, or not at all. And the bottom line is that you, and only you, are always in control. As the source material says, you can trade assets while maintaining true custody. This is that core principle of your keys, your crypto in action, and it dramatically cuts down on the risks you see with centralized platforms. So, you might be wondering, where did this cool technology even come from? Well, Maya didn't just appear out of nowhere. It was actually built on a very proven, battle-tested foundation, which gave it a huge head start. See, by building on code that's already been out in the wild, Maya got to inherit a really robust security model from day one. In the world of DeFi, where trust is everything and exploits are all too common, starting with a proven architecture is a massive advantage. And that foundation is Thorchain. Maya is what's known as a friendly fork of Thorchain, which is a real pioneer in this space. And this isn't a hostile thing at all. It's more like a collaborative expansion. The success of Maya actually helps strengthen the whole ecosystem, which is a win-win for both protocols. Okay, so if it's based on Thorchain, what makes Maya different? What's its unique edge? Well, it really comes down to the specific blockchains it chooses to connect with, opening up doors to completely new ecosystems. And this slide illustrates that strategy perfectly. Of course, you have the heavyweights like Bitcoin and Ethereum, but where it gets really interesting is the unique access it provides to chains like Dash, Radix, Kujira, and the massive Arbitrum ecosystem. By plugging into a chain like Kujira, for instance, Maya taps into a whole dedicated community that was previously much harder to reach. So, let's zoom out. What does all of this mean for the big picture, for the future of decentralized finance, or DeFi? By combining that solid, proven technology with a unique strategy for expansion, Maya is on what the source material calls a strong trajectory. It's part of a much bigger trend in DeFi, a move towards giving users more control, making trading more efficient, and creating a future where the walls between blockchains just start to dissolve. And that leaves us with a really fascinating question to think about. When swapping assets between any two blockchains becomes this simple and secure, what does that mean for apps that were built to only exist on one chain? The future might not be about a single dominant blockchain, but a completely fluid and interconnected web of many. Definitely something to keep an eye on.